Welcome back to the Crypto School channel. Now, we're going to be talking about two moving averages, the 50 moving average and the 200 moving average. These moving averages create the golden cross and the death cross. And what we're going to do is we're going to apply these two indicators to your chart. And I'm going to show you step by step how you can do that. More importantly, we're going to look at exactly what impact the golden cross. Everybody loves a golden cross if you're in retail. Everybody hates a death cross if you're in retail. But what we're going to do is look at what impact price has every time that these things happen. And I'm going to show you one tip how you can understand how this golden cross or this death cross is a higher probability move by just doing this one thing. And we're also excited for the launch of this channel, the new Crypto School channel. Watch this space, guys. There's going to be so much content which is going to be educational on this channel. But if you really want education, if you really want to accelerate your journey, get yourself in the official Crypto School. So this has got a wealth of information by big influencers, big traders, big players within the space that have got a wealth of knowledge, and they're designed, and this program's designed to accelerate your journey by giving you the correct information. That's the problem. There's so much stuff on YouTube, there's so much stuff on Twitter. It's the wrong information a lot of the time, and it skewers your bias. So this is structured in an organized way to help accelerate your journey. Link in the description below, and I'll see you over there. But we're talking about moving averages. So let's jump back into the charts, and I'm going to show you exactly how to add these moving averages to your chart. And we've just jumped over to TradingView. So one thing that you can see on this chart, let's read it, let's decipher it. What is a golden cross? What is a death cross? What are the moving averages? How did you apply them to your chart? We're going to go over each and every single thing in this video. So you'll see two lines. To start off from the very basics, you're going to see a yellow line and you're going to see a green line. So your yellow line is your 50 period moving average. This is the daily chart. That's 50 candles averaged out over a period of time continuously on the chart. Your green one is your 200 moving average, which is exactly the same, apart from it's 200 candles averaged out continuously over a period of time. So we look for golden crosses and we look for death crosses. So firstly, how do you apply these things to your chart? You go into indicators, and the little trick that I show everybody is type in 3MA. If you've got a free TradingView platform, you can do this, and it saves you from applying 2 or 3 different indicators to your charts at once, because this combines it in one indicator. So you're looking for 3MA, 3 moving average. You're going to click that. You're going to click that, and you'll get something like this. 3 moving averages. So what you're going to do is you're going to click on the settings, and you're going to make sure that you've got a 50 period and a 200 period on the inputs. So I've got a 20 here, a 50, and I've got a 200. Remember, 3 moving averages. So just to simplify this, I'm going to get rid of the 20. The 20 is not on there. The red's not on there. So we're left with the 200 and the 50. What is a death cross? What is a golden cross? We'll start with a golden cross. This is a golden cross. When the 50 period yellow moving average moves above the 200 moving average and price action's above. That's strong, that's bullish. What is a death cross? Unfortunately, it's just happened here. When the 50 moves underneath the green, that is a death cross. Now, I just want you to look at how price reacts each time we get a golden cross and each time we get a death cross. So we've got a death cross here, price, bam, all the way to the downside. You've got a golden cross here, bam, price all the way to the upside. So you can see the impact that this has every time that you have a golden cross or a death cross. Here's a golden cross, big push to the upside. We can go back 2021. What happened? Death cross, bear market, downside. Now, golden cross, start of the bull market, big push to the upside. That's what happens every time you get a golden cross. That's what happens every time you get a death cross. Now, for a high probability move, we need one thing. Let's talk the golden scenario to start with. You want your moving averages to be flagging upwards and price to be above, holding them as support. So you've got your 50 moving upwards, you've got your 200 moving upwards. That gives you a high probability move. Exactly the same for the bear case, your death cross. You've got the 50 flagging down after it's just crossed beneath the 200, and your 200 is also flagging down. Now, what do I mean by flagging up or flagging down? Let me show you this scenario here. This is what I call flatlining. So you've got flatlining. Your moving average isn't pointing upwards. So you can see that this green moving average isn't pointing upwards. It's going sideways. What's happening with the yellow? It's going sideways. So you've got sideways action until something happens. You get the upward trajectory of the 200. You get the upward trajectory crossing over of the 50. You get price action holding that as support, and that is a higher probability golden cross. Now, there is a caveat to this. Moving averages, they're indicators. Should you use them in isolation? As far as I'm concerned, definitely not. Why? Because indicators are often lagging indicators of exactly what price has already done. So, what do I mean by that? By the time that you have a golden cross, or by the time you have a death cross, price action would have mostly made its main move. So, if we just look at golden crosses here, you can see, let's have a look at the recent price action on these ones. You can see you've got a move to the upside. Where's your golden cross? Your golden cross is here. So your golden cross is here on the 25th of May. There's the move to the upside all the way to the 25th of May. You can see price action's made a 50% move to the upside by the time it's made its golden cross. So they're lagging indicators. You use them in conjunction with price action, in conjunction with other indicators within your strategy to get that bigger picture. Because a lot of the time, when you get a golden cross, when you get a death cross, the biggest part of the move has already been made. So, guys, don't forget, get yourself into crypto school if you want to accelerate your journey. Like I said, $99 a month. Link in the description below. And don't forget, subscribe to the new school channel. I'll see you soon.